return, next one is the repayment, and third one is the risks, is not it? On a return we have to judge on what? Estimate the additional cost and the additional return, and we should look for the particular point that whether the additional return sufficiently cover the additional cost or not, and it is arise only because of what? Only because of the what? Because of the diversification of the existing cropping pattern to get the better productivity, is not it? That is the introduction of a new crop, elimination of the non-numeric crops, all these things are generally done, and here we have to make two budgets, that is one as the budget for existing plan and one other for alternative farm plan, okay, by investing the money in the form of borrowed money, okay, by adoption of the higher technology. There we have to adjust generally additional cost involvement, and our objective is there to get the additional return, is not it? So we should look for that particular point, that whether the additional return sufficiently cover the additional cost or not. Then next objective is to go for the estimation of the repayment capacity of the borrower, is not it? Repayment capacity, I have given the calculation of repayment capacity, and there is only one differences on the estimation of repayment capacity regarding the classification of the credit in relation to the classification of the credit, that is repayment capacity. In one way we may go for the liquidating loan, and another one is the estimation for non-liquidating and partially liquidating loan, is not it? Then third one is the risks, that we have to estimate the risks, okay. Then there is the one way for estimation of the risks. Generally we have to consider the risk coefficient there, that is this difference between the potential yield and the actual yield received by the farmer in that particular situation. The gap we are considered in the form of the percentage, and that percentage simply may be called as a risk coefficient, and that risk coefficient simply may be deflated along with the repayment capacity of the borrower, and that deflated repayment capacity simply may be equated to the risk bearing ability of the farmer. And when we got the positive answer for all these three, you will get it in practical detail by quantifying, by considering the data I will give you. Then you will get that loan advanced by the banking institutions to the farmer is in safe proposition. That is the enough in summary, that is the regarding 3 years of credit. Now today regarding the economic feasibility test of farm credit proposal, here we consider the 5 C's and 7 P's of credit. 5 C's and 7 P's of credit. Some economics always try to examine the economic feasibility test in different way. There we get the economic feasibility test as 3 years of credit. Here we will discuss the 5 C's or 7 P's of credit. Same thing we will discuss in a different way, okay. So this is to get the economic viability of the project. Project means the enterprise, okay. In selection of the enterprise, selection of the project, we have to submit to the whom? To the bank to get the loan, and the banker will go for the examining the project, where the farmer will invest the loan. They will look for inter items, then they may go for the estimation of the return, okay. So likewise in this process, the some economics tell this economic feasibility test try to examine this on this in way. At first we consider the 5 C's of credit. You see, that is next to 3 years the other tests that can be applied to the study of economic viability of scheme or investment. Economic viability of the scheme. Scheme means the scheme that the farmer will submit to the bank, okay, of the activity known as 5C, namely same thing. First one is the character, second one is the capacity, third one is the capital, fourth one is the condition, and fifth one is simply may be called common sense. Now what is the character? Character you know. Character of whom? Borrower. Simple. This basic credit, basic needs of the credit transactions is the character. Okay. Generally the banking organizations encourage by these type of things, the character, that is this on the confidence influenced by the borrower, like qualities of the borrower, honesty, integrity, commitment, hard work, promptness. All these characters generally lead to the bankers to give loan to the farmers. So generally they look for this. If the farmer, any informations are available along with the bank regarding the farmer, regarding this type of the variables, that is honesty, integrity, necessarily the bankers will go for the giving loan easily to the farmers. It should be along with the farmers or borrower. The character means the mental as well as the moral character. And when the farmers have the both good mental as well as the moral character, necessarily the farmers also have the farmers which have the good mental and moral character also have the good credit character also. It is the belief of the banking institution. Necessarily good farmers possessing good mental and moral character, because this also lead to the credit worthiness of the farmer. The judgment is the credit worthiness of the farmer. The banking organization may look for the quantifying the credit worthiness of the farmer, but on the basis of his record of the mental as well as the moral character also lead to justifying the credit worthiness of the farmer by the banking organization. Do you understand? And second one is the capacity. Capacity is nothing. What is this? You may call as a capacity related to repayment capacity simply. Repayment capacity is synonyms of capacity, synonyms to repayment capacity. And capacity is directly can be given as a C that is equal to function of Y. The capacity is the C, Y is the income, is not it? So, higher farmers along with the higher income, he may have the good repayment capacity. Simple, same thing, repayment capacity, we can express this repayment capacity in this way. Okay? This is synonyms of the repayment capacity. Enough to get? Okay. In but 3 years of credit, we can estimate, regarding the 3 years, we can estimate the repayment capacity. Okay? And third one is the capital. Capital here forms the equity or net worth. When character and capacity is found inadequate, then capital will follow what? Follow to give the loan to the farmers by the banking organization. That because this capital, the equity, that is the investment capacity of the borrower in these enterprises, necessarily help the farmers to overcome the different types of risks that are involved in the agricultural occupations. Do you understand? If the farmer in the grip of any type of risk, necessarily the farmer to overcome the risk factors, generally this type of things, that is capital or equity, help the farmers to overcome the risks. So generally the banking organization also look for this power of the farmer, that is the in the form of equity or net worth, that is the amount of capital available along with him for better or future investment. Okay? And not fourth one is the condition. It refers to the conditions needed to obtaining a loan from financial institution. Yes, I will discuss later on. There are several formalities generally followed by the banking organizations in sanctioning the loan to the farmers. We have to go through the different steps for sanctioning the loan or getting the loan by the farmer or sanctioning the loan by the banking organization. So all these things are generally considered under this fourth number of C's, that is the number 4 C, that is the conditions. It refers to procedural formalities like loan application, submission, scrutiny of the records, loan eligibility criteria of the farmer, checked by the banking organizations. Then they may go for the sanctioning of the final sanctioning of the loan to the farmers. And last one is the common sense. Common sense, this is the refers to the perfect understanding between the lender as well as the borrower in credit transaction. That is this, there will be better understanding between the borrower as well as the banker. Banker also look for the all the conditions that to be preferable by the borrower, as well as the borrower also have the faith along with the banking organization. That is this, the bank will help us in when we need. This type of understanding along with the both borrower as well as along with the banker. Okay, and all these are things are considered in the form of common sense. So these are the 5 we are considered in a different way, in different economic points of view. We consider the 5 C's of credit in relation to the economic feasibility test. Okay, and some economics again considered these in other way, which are popularly known as 7 P's of credit. These financial institutions, while lending to the agricultural sector, not only consider the commercial gains but also the social benefits. This is the important one. Advancing the loans to the borrower, the objective of the advancing loans to the borrower by the banking organization not only look for the commercial gains, that is the earning of the profit by the banking organization, but advancing loans to the, especially to the agricultural sector, being as a prime sector, also integrated or related to the gaining of the benefit at a social desired rate. Okay, because in our economy, this 70 to 80% of the farmers are people are in the related to this type of occupations. So, to gaining social welfare or social benefit as a social desired rate, generally the advancing of the loan to the prime sector also related to this type of things. So, we consider all these things in this 7 way. First one is the principle of productive purposes. Second one is the principle of the personality, is coming from again from character. Then principle of the productivity, and fourth one is the principles of the phase disbursement, generally followed by the banking organizations only to check the diversion of the credit. And the fifth one, principle of the proper utilization, it related to, I have mentioned to you, that is the supervised credit, that is this supervising of the utilization of the credit after disbursement of the credit to the farmer, generally done by the bank officials. And sixth one, principles of the payment, it related to the repayment, choosing of the most appropriate repayment plan to the farmers according to the situation. Okay, and last one is the principles of the protection, that is this, to overcome the risks, several protective measures are to be taken by the banking organization and given to the farmers to protect the loan, that the loan should be protected, it will be beneficial to the banking organizations, also it have the giving the ability to the farmers to overcome the risks. Okay, and how we discuss what is this? First one, principles of the productive purposes. This is coming from this point. You see, the credit requirement is visible only to all types of farmers, but significant on the credit requirement is significant. No, credit requirement is significant in case of the marginal and small farmers. Credit need by all types of farmers, but requirement is significant in case of the marginal and small farmers. So, in absence of the consumption loans, I have already discussed the consumption loans are essential. I will discuss later on why it is necessary, because the marginal small farmers to meet the cash requirement, mind it, to meet the cash requirement or cash demand, okay, in their day-to-day life, they generally try to divert some amount of credit as a consumption loans. Okay, so the banking organization now look for that particular point also, to give some amount of loan that farmers may use some amount of loan is for consumption or as well as to maintain their day-to-day life, okay, or daily life. So, hence these principles, productive purposes, says that loan disbursed to any borrower should be capable of generating incremental income. Incremental income coming from the what point? That is this, along with the income coming from his main occupation. Do you understand? Along with the income coming from his main occupation, as suppose as a growing of the crop or different types of crops, if the farmers can be engaged by the banking organization in some other allied activities, it will help to the additional income that can supplement to his major or main income, which will help the farmers to go for increasing his net worth or equity. So, it is given as the short-term loans or of the small and marginal farmers can be made productive. Yes, it is productive, but if they are provided with other income augmenting assets through term loans, it should be given. And now the banking organizations are taking these principles along with the other types of loans in the form of crop loan or in the form of any type of short-term loans. The farmers, beneficiary farmer already selected by the banking organizations, they also try to disburse some amount of loan as a income generating loans for the generating the income generating assets. That is this, the income generated from these productive assets will aid to this actual income, the supplement to his actual income, and can be coming from these type of things, that is from raising the dairy animals, sheep, goat, poultry, installation, palm, sets are the some examples of the income generating assets. And these are the some things that are to be identified at the banking organization as a income generating assets. Along with the actual loan given by the farmers, they generally try to give some type of term loans to this type of income generating assets that their farmers may go for the increasing his income, which can supplement to the or supplement to his major or main income, and which may lead to the increasing his own savings, that he may go for better investment in future enterprises or future investment. Okay, then this coming under the principles of the productive purposes generally followed by the banking organization nowadays. Okay, and next one you see personality. It is simply, I have already discussed in C, the character. Same thing as this kind of principles of personality. The safe element of the loan is not totally dependent upon the security of the loan alone. Yes, every loan, for most of the loan, farmers have to give some amount of security. It may be secured by the banking organization by taking security in any form against the loan. But after giving the security, some farmers may go for the willful default of the loan. Do you understand? Security to diar software care no kore. He does not care about the repayment of the loan. And this is the major problem generally facing by the most of the banking organization, willful default. And due to the willful default, again I am repeating here, generally most of the banking organizations facing the problem of the mounting of the overdue, especially in relation to the agricultural sector. Okay, so the growth of the progress of the lending institutions depend entirely on the personality factor of the borrower. So when willful default coming due to the bad character or bad morality of the farmer, then which due to the dishonesty habit of the large farmers, the borrower substantial funds may be functioning of the lending institution is affected, badly, inversely affected. That is this we may call as simply as a mounting of the overdues due to the willful default of the farmer from the side of the farmer will generally adversely affect on entirely banking system in relation to the loan to the agricultural sector. So the banking organization now look for particular point also, that is this how the lowering down the mounting of the overdues or willful default from the farmer's side. So they generally care of this particular point. They check the personality of the borrower before disbursing loan to the borrower. Okay, the personal record, they will generally try to check it. Then principles of the productivity. The principle stresses that the credit which is advanced is not just meant for the increasing the production, but the enterprise alone, but should be able to increase the productivity of the other factors employed in the enterprises. That is this other resources along with the major occupation, the other resources used in the enterprises should also generate ability, should also have the ability to generate some income to the total income. Okay, so here decision making processes involved. So here entirely the principles of the productivity stick on particular point that I have discussed in the 3 hours of credit, the selection of the enterprise in relation to the present or existing economic agroclimatic conditions. Selection of the enterprise, combination of the both, suppose crop along with the livestock, combination of both. So what type of livestock we should consider along with this major occupation as a crop, and it should be economical enterprise that we can go for the minimization of the cost. All these things are generally considered in the principles of the productivity. So here I am giving as an example, suppose preparing HYB to improve variety among the competitive crops, that is the selection of the crop. I will give you in detail on the on that preparation of the alternative farm plan, you will get it. I will give you the clue how we can go for the selection of the crops. Next one is the selection of the breed which is superior among the all alternatives available along with the farmers. Choosing the one which gives the relatively higher returns. That is this, it can be given, it can be chosen by the farmers himself, but the banking organization also, before disbursing loan to the farmers, they can give guidelines to the farmers in selection of the better enterprises which can give highest return along with the minimization of the cost. Okay. And you see principles of the next phase disbursement, and you see, yes, in case of the crop loan, first thing, crop loan generally given as a short term loan. It is given for one crop season, no matter in a one installment. Entire loan can be used, can be given by, disbursed by the banking organization, and entire loan can be used by the farmer for purchasing of the basic inputs, and entire loan amount is converted to the working capital. Okay, but in some cases the loan can be disbursed, loan are generally disbursed by the farmers for a perennial cost. Suppose it goes over 2 to 3 years or 4 years like this, and loan amount, total loan amount can be assumed by the farmers or by the farmers as well as the banking organizations, but their requirement for loan in different parts of the period, different periods. Okay, so according to the requirement or according to the time of the requirement, the loan can be disbursed, loan should be disbursed by the banking organization. And generally, to check the diversion of the credit to the unstipulated purposes, the loan which are used for the, especially for the perennial crops or for the big enterprise, are generally disbursed by the banking organization. They follow this type of phase disbursement only to check the diversion of the credit disbursed by the banking organization in a phased manner according to the requirement of the borrower. Suppose the first time the loan is disbursed to land preparation, then loan disbursed for other things. Likewise, according to the requirement, that is according to the activity, the loan are generally disbursed, try to disburse by the banking organization, and generally phased disbursement are generally followed by the banking organization for the larger amount of loan only to check the diversion of the credit to other purposes. That is this generally considered by the banking organization, that is for on the principles of the phased disbursement. Okay, that is this loan will be disbursed, entire loan will be disbursed first thing, but one thing is there, that according to the time of requirement. Okay. And first, fifth one, principles of the proper utilization. It related to what thing then? Again? Optimal use, then you may call as a credit supervision. Supervised credit. That term generally used by the banking organization, is not it? Credit supervision. That the banking organization nowadays not only confine their activities only to disburse credit, but also to recover the credit. And better recovering can be assumed by the bank only through the better utilization of the loan by the farmer, that they can get the higher income and they may go for the better repayment. Okay. So generally banking organization, after disbursement of the credit, they may go look for the proper utilization of the credit. Again same thing, here discussion discussed as the principles of the proper utilization. And along with this, some facilities which can help the farmers for generating higher income, like storage, better transportation, marketing, etc., all our price stability, all our things can be given by the banking organization. The bank may give the information regarding the price. Okay, bank may help the farmers to go for the market, taking the facilities from the marketing agencies. They may go for help to go for the transportation, may hold for the storage. That the storage help the farmers to go for better price, selling of the products in the right time at the right price. All these things can be combined in a integrated manner. All these things are generally examined by the banking organizations and help the farmers to go to take this advantage of this type of facilities. Okay, the bank officials. Okay, and this is coming under principles of the proper utilization. And sixth one, you see, principles of the payment. That is nothing. It is this choosing of the what? Choosing of, to try to, choosing of what? No installment, choosing of the repayment plans. Yes, I am inform you that I will discuss in the practical that different types of repayment plans are available with the banking organization. Different types of repayment plan. Amortized repayment plan, amortized increasing repayment plan, amortized decreasing repayment plan, variable repayment plan. These are the some names of the repayment plan available with the banking organizations. Okay? And after disbursement of the loan, after utilization of the loan, bank will fix the appropriate repayment plan to the farmers. The farmers, after completion of the crop, the farmers may easily go for, according to the repayment plan fixed by the banking organization, they may go for the repay of the loan. We should not give, or the banking organization should not advocate this type of repayment plan which can adversely affect on his repayment capacity. Okay? I will discuss in the practical different types of repayment plan available with the banking organizations, and generally the banking organizations also look for the economic conditions of the farmer as well as the enterprise that are adopted by the farmers according to his income generating possibilities. Generally the banking organizations fix the repayment plan to the farmers, and all these things are considered under the principles of the payment. Do you understand? And seventh one, last one, principles of the protection. The farming is always, again I am telling you here, farming is always the unforeseen due to the calamities and become generally risky due to the association of the high level of risks during different forms. Again, okay, flood, drought, pest, diseases, all these things. So the credit linked with some risk covering instruments to protect the loan by the financial institution. Financial institution now, to protect the loan, generally try to link the credit or the amount of loan along with the some risk covering instruments. Likewise, first one is the most popular new concept now is the most popular, that is this insurance coverage. That is the one concept is coming is nowadays for the farmers, that is the taking of the crop insurance, advantage of the crop insurance schemes. This crop insurance scheme also, detail of the crop insurance scheme also covered under this course I will give you. How the bank will go for the crop insurance scheme, how we can follow the different methods, the estimation of the under different premium under crop insurance scheme. All these things will be discussed detail later on, and this is the crop insurance scheme. Second one, linking credit with the marketing tie-up arrangement. I am already informed you the regulated market. Okay, the regulated market is set up by in the public sector by the government. Okay, after disbursement of the loan, the bank organization also give the advice to the farmers to take the advantages of the regulated market, that the farmers may sell their produce in a remunerative price by taking different advantages given by the regulated market, that the farmers can avoid the problem of the distress sale or the forced sale. Already I am informed you. Then provision of the finance against the warehouse receipt. Yes, again this is I also discussed, inform you what is warehouse receipt. Do you know the warehouse receipt? Yes, again regulated market. They have the warehouse along storage facility in the form of warehouse along with them. Then farmers may take their product to the regulated market, and the officials of the regulated market try to keep their product in the warehouse maintained by the regulated market, is not it? And after receiving or after taking the products of the farmers in the warehouse maintained by the regulated market, they try to give one receipt against the value of the proper value of the product. Okay, and this is this receipt given by the warehouse officials or regulated market to the farmer as a warehouse receipt. It is a valid receipt where the value of the stored product of the farmers are generally mentioned, and this is a valid receipt by this type of organization, the farmers may give this receipt again as a security to the banking organizations for taking fresh loan for better or future investment. Suppose product is stored for a long period, 6 or 7 years. In this period, the farmers may require some amount of money. First thing, to meet these cash obligations for day-to-day life, or other way for future investment. Where the farmers will get the money? Instead of selling the product, So necessarily the farmer may go for the taking fresh loan from the bank by depositing that warehouse receipt given by the warehouse where the value of the commodity or stored product is mentioned, and against the value of the commodity mentioned there in warehouse receipt 70 to 80% of the total value of mentioned in the warehouse receipt as they may take as a they may take again as a fresh loan from the bank for his future or better investment. Okay, this is valid receipt. All these things. Then taking the sureties. Sureties are generally taken as a guarantor or in other way. The bank may also take the sureties. And covering the credit under small loan guarantee scheme. This is the another scheme. New scheme is coming on the force in the agricultural sector. That is the Deposit Insurance and Credit Guarantee Corporation of India. Scheme given by this corporation, Deposit Insurance and Credit Guarantee Corporation of India. I will give detail about the what is the functioning of the Deposit Insurance and Credit Guarantee Corporation of India. It is also help the farmers to overcome the risks. This type of corporation. I will give you detail about this Deposit Insurance and Credit Guarantee Corporation of India later on. Okay, and these are the some principles, 7 principles, and as in commonly known as a 7 P's of credit in economic viability of the judging the economic viability of the project in different way as a 3 R's of, but popularly first one is known as the 3 R's of credit. And lastly, I try to tell you here the what are the procedural formalities generally followed by the banking organization. All the bank organization before disbursement of the loan, they will look for this type of things. They have to cover all these steps up to the final disbursement of the loan. Firstly, they try to take the interview of the farmers. 10 steps you see. Interview the farmers. Then they advise the farmer to submit their application. Okay, they try to accept the application of the farmer. Third one, they try to scrutinize the records that are given by the farmer. Scrutiny of the records is essential. All are done by whom? By the bank officials. This is duty of the bank officials. Then the bank officials, in the form of the marketing officer, in the form of the field officer, they try to visit the area that are mentioned by the farmer. Farmer's area, they try to visit before disbursement of the loan. Okay? Then they will check the eligibility criteria of whether the farmers follow all the eligibility criteria to take loan or not. Yes, I will give you different types of eligibility criteria are considered by the banking organizations before disbursement of the loan, and they will check all these eligibility criteria whether the farmers fulfill all the eligibility criteria or not. Then they will go for the sanctioning of the loan. Then after sanctioning and disbursement, mind it, this is 2 things. They may sanction but not disbursement. They sanction the loan. Okay, they will give the sanction paper to the farmers that your land loan is sanctioned. Okay, then the farmers are informed to give all the required documents after sanctioning loan. Submit all required documents, that is land paper, all these things to us. Then after getting the sanctioning paper from the bank, the farmers will come to deposit all the required documents to the bank. This is the procedure followed by the banking organization. For your information, I am giving you here. Okay. Then after sanctioning loan, submission of required documents, then the bank will go for the final disbursement of the loan. And earlier, all these activities confined along with this. Again, I am mentioning here. Now, this coming other 2 points. That is this post-credit follow-up measures. That is done by as a supervising of the credit. That is, all the bank officials will look for after disbursement of the loan post-credit follow-up measures. That they will check whether the loan is properly utilized or not, what type of enterprise he select, and what way he go for investing the loans. All the guidelines, all the technical advice also given by the bank officials. And lastly, they will go for the final, that is this recovery of the loan. And in these are the 10 numbers of steps are generally followed by the bank officials for disbursement of the credit to the farmers. So all these things That is, along with the 3 years of credit, we may judge the credit worthiness of the farmer from our viability of the enterprise of the farmers that are taken by the farmers as the five C's of credit: character, capital, capacity, common sense, is not it? And likewise, we may judge the viability of the projects from this point, which are also commonly known as the 7 P's of credit. And along with this, you should know at least what are the formalities generally observed, steps are generally observed by the banking organization for final disbursement of the loan, along with the post-credit follow-up measures. Do you understand any question?